Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you, but markets not giving a very good afternoon to the investors. Below the 19,100 level at one point of time, now trying to make a slight bit of a comeback, at least if we could say that.
Absolutely, the market is definitely not looking that pretty right now. As you can see it on your screen, you have Nifty that's fallen approximately over 1% from the day's highest point, and it's just not limited to Nifty alone. Take a look at what Nifty Bank also is doing at this point in time. And as we can see it on your screen, Nifty Bank also is down approximately 1% from the day's high. Broader markets is the place where the hit is even more sharper. When you look at the small cap index, is actually down over 2% from the day's highest point, and mid cap index is also down about 1.5% from the day's highest point. So if you look at the way how the markets have fallen over the last 2 hours or so, the fall has only aggravated when it comes to the benchmark indices. You have Nifty that is near a 4-month low. You have Nifty Bank that's a 5-month low levels, as well as Sensex has slipped below the 64,000 mark as well. A lot of stocks in the negative territory. Hopefully, Vinny, I hope that the stocks that we have taken for Market Fatafat hold on to their sort of percentage gains or losses.
Absolutely hoping for that, but that we'll know when we go through all the stocks that are buzzing in trade on the back of news flows or on the back of technicals. And on the technicals today, we're joined by Sumeet Mulchhandani, while from the research team we have Ansh as well as Vamakshi joining in with us. A very good afternoon to all three of y'all as well. And let me start with the first stock that's in focus and that we're going to talk about is Prestige Estate. Now this one is in focus on the back of a brokerage note from Nuvama, with their initiating coverage on Prestige Estates. They've given a buy rating, target price of 917 rupees per share. What more Nuvama is actually highlighting is that the boost of the robust pre-sales momentum, strong execution credentials are something that they're watching out for. There's improving geographical diversification counters inherent into cyclicality that will support them as well. And overall, they believe to sustain the growth trajectory and clock a pre-sales CAGR growth of around 18% over FY23 to 26. They're leveraging to increase the mainly driven by the annuity capex as well as net debt to equity is likely to touch 0.9 times in the future, is what Nuvama believes for Prestige Estate. Furthermore, they're saying that the pre-sales growth and improvement in the office demand and leverage trajectory is likely to be the key trigger for the stock going forward as well. And like you're seeing on your screens, after a spike up with the markets, we're seeing that Prestige Estate also is down and out in trade, down almost 0.8% right now, Sharon.
All right, let's talk about Gensol Engineering, because that was one of those counters that was a bright spot in the market, given the fact that it bagged an order and continues to hold on to gains. At one point in time, no doubt, the stock was trading higher by about 9% or so. Now it's trading higher by about approximately 5%. The company has bagged order worth about 302 crore rupees for solar PV project that's situated in state of Maharashtra. The stock, in fact, has snapped its 3-day losing streak, and it is actually headed towards its record high levels, which it had hit a week ago. But right now, the stock has given up some of those gains, but nevertheless holding on to good gains of approximately 4.9% in an otherwise extremely weak market.
Okay, let's move on and talk about the next stock that is in focus today, and that is Bajaj Consumer Care. And Sumit, this stock, we saw a bit of a fall coming in this morning in the stock, and as of now, I beg your pardon, actually it was rising as much as 13% intraday today. As of now, also holding on to gains of almost 7%. What is the view on Bajaj Consumers now? What are the charts indicating for this one?
Hi, good afternoon to all. So the stock has given the breakout at the levels of 190. So afterwards, it has done the 260 levels also. But right now, we are thinking that it is just a profit booking, or if you will check the Fibonacci, it has taken a perfect support at 38.2 levels and trying to retrace now. So retest candidate is good. So fresh positions can be made if it is giving the close above the 250 levels. Current market price is around 246, but we are expecting a good upward from here to the new high of 304. So if anybody is holding, can trail the stop loss till 220. So just hold the stock and also add more above the 250 levels.
All right, let's talk about another bright spot in the market. Vamakshi, and surprise, is Delta Corp actually that was seeing good strength in the markets today. 6% higher at one point in time. What's the news flow surrounding that up move that the stock had witnessed earlier?
And in fact, not just 6%, Cheryl. In fact, the stock has jumped the most in the last 16 months, and the news flow is as follows. Bombay High Court has actually gone ahead and directed the Directorate General of GST Intelligence, Hyderabad, to not pass any final orders, and this is on the tax show cause notice that was served to the company as well as its subsidiaries by the tax authorities. Now keep in mind that earlier the tax authorities had issued a show cause notice alleging a shortfall in tax payments by Delta Corp as well as its subsidiaries amounting to nearly 16,195 odd crores. The company now says that dates have been fixed for the completion of pleadings and the hearing and the final disposal of writ petition as well. So largely on the back of this news flow, that is HC intervention in the GST case, that is a big positive for Delta Corp, and that is the reason why the stock is still holding in the green, up nearly 2%.
Okay, one more company that is holding on in the green is Torrent Pharma, Ansh, after its numbers. Give us a breakdown on what the numbers were looking like and currently what the stock is doing.
Yeah, you are right. Torrent Pharma is up actually 3 to 4% in trade today, and this is because mainly of the release of quarterly results. Company has reported revenue at 2,660 crore, which is up by 16% on year-on-year basis. Profit after tax stands at 386 crore as compared to 312 crore a year back, reflecting an increase of 24%. EBITDA for the company is at 825 crore, showing a growth of 21.5%. If you see the country-wise breakup of the revenue, then India revenue has grown by 18%, Brazil revenue is up by 36%, and Germany is up by 21%. Only USA revenue has decreased by 15%. So this is the reason why stock is trading higher today in this falling market.
Alright, another stock that is in focus is definitely Dreamfolks also. Just check the flash on the bottom of the screen. You have the numbers that's come out for that particular counter. 17.8% is the consolidated PAT as against 14.82 crore rupees on a year-on-year basis. You can see the uptick coming in the stock price as well. The revenues also have better on a year-on-year basis. So that's Dreamfolks for you. That's reacting to its numbers as we speak. But Sumit, let's talk about Torrent Pharma and how is this one looking on the charts to you? We heard Ansh talk about the fundamental side of it. You had the earnings, you have brokerages that have come out with their views on that particular counter. But on the charts, do you think Torrent Pharma is something that you should watch out for in at least the mid-cap pharma space?
If you see the chart in the last week of August, the stock was fall in a week about the 8 to 10%. So after that the stock was trading in that range only. So today we are just waiting for the 1950 levels to cross and sustain above. If it is giving us the closing on the daily basis, then the stock is looking good. And if it's already holding, then we will just keep the stop loss up today. So today's stop loss is today's low is 1820. So keep a stop loss of 1820. We are expecting the new high still the levels of 2294.
Okay, keeping an eye out on those levels over there. Let's move on and talk about Wonderla Holidays. The stock today jumped up in trade today. It was at record levels after the company said that it got all the necessary approvals from the southern India state of Tamil Nadu for setting up a new amusement park. Now, the company will be investing around rupees 400 crores, that's almost $48 million in the project, which will be located in Tamil Nadu's capital city, Chennai. The shares rallied as much as 9.9% today, trading with volumes at around 3.5 times on a 3-month average basis. When you look at it, it was 3.5 times that 3-month average. And as of now, also the stock is holding on to green, up almost 6.5%.
All right, moving on, Sumit, let's talk about Ashok Leyland and how is the CV major looking to you, at least on the charts for now?
Below the 170 levels, it has given the breakdown of cup and handle on the daily basis. So we are expecting a fall from here also. So if any F&O player is there, one can keep a stop loss of 174. So we are expecting the levels of 160 and 154. 160 is also the 200 moving average of the stock. So if it is trading below the 160, then more fall can come. So keep the eyes on these levels.
All right, that's the take coming on Ashok Leyland and the recovery for Dreamfolks also on the bottom of the screen. 6.5% off the day's lowest point, Vinny, and the stock is reacting to its earnings in the positive territory now.
Absolutely. But on that note, let's just slip into a very short break, viewers. We'll be back with more stocks after the break.
Welcome back. You are watching Market Fatafat on ET now, and let's continue talking about the stocks that are in focus and take a look at what the aviation counters are doing. That is Indigo as well as SpiceJet. Both of these counters were actually buzzing in trade when the markets open up for trade, and right now also they are actually holding on to good gains. In fact, you have Indigo that is all set to snap a 4-day losing streak as well. The winter schedule shows that domestic departures were higher by approximately 8% per week versus last year and up 4% versus the summer schedule. This is as per reports. Indigo could see departures higher by about 30% on a year-on-year basis and 14% versus the summer season, while SpiceJet could see a 33% year-on-year fall, but only 5% fall when you compare it with the summer season. You have Akasa, also the new entrant, who's likely to see a 5% jump versus the summer schedule, while Air India could see a 13% jump versus the summer schedule. So on a higher schedule or scheduling for the winter season, you can see all of these aviation counters holding on to gains in otherwise weak market.
Okay. That is the aviation space, but let's also look at Welspun Corp before we I beg your pardon. Welspun Living is the name of the company that previously known as Welspun India. We can see the numbers flashing on our screen as well. When you look at the profits of the company, a sharp jump up in the profits. That's something that we're watching out for. Profits have come in at 200 crores versus 8.33 crores. But in terms of the EBITDA margin, doubling in terms of EBITDA margin, 15.4% versus 7.1% as well. And flooring business also has seen a good growth. The textile business, that has also seen a good growth, and the highest ever quarterly revenue is what the company has seen. So keep an eye out on that one. We've seen a spike up coming in the stock, but after that, a bit subdued in trade, given that the market is also a bit weak. But let's move on to the next one on the technicals, and that is Axis Bank. That one is in focus as well. And Sumit, when you look at it in terms of overall, the performance on a YTD basis also has been quite subdued for Axis Bank so far. And last 1 month specifically, we've seen a bit of a decline coming in. So on the technical front, how is Axis Bank looking like now? Is it the right time to enter the stock? If you're on mute.
Sorry, but instead of going for the long, we are suggesting for the short, because if you see the technicals, it has broken all the mostly its moving average is 50, 100. Then it has broken a trend line which was drawn from the March 2023. So it has broken the trend also, and currently if you see, it is trading on the lowest rate of the day. So we are expecting more downside till the 200 level, that is at 930, and if it is trading below the 930, then 890 will be the next target. So better to exit at the current market price or make a new short position.
All right, moving on. Vamakshi, let's talk about UGro. Why is this one in news today?
Well, Cheryl, this stock is in focus on the back of a brokerage note that has actually come in from MK. They've gone ahead and initiated coverage in this counter with a buy rating. And not just that, they've also given a target price of around 425 rupees per share, which actually represents a significant upside from the current levels. They have highlighted that the company's business model aligns around the evolving ecosystem as well as scale. They do believe that the company does have enough systems as well as processes in place that give some sort of comfort as far as the asset quality is concerned. Not just that, they've also highlighted that co-lending with business partners is mutually beneficial, and in fact this does provide a very long runway for growth for UGro Capital. Apart from that, they also believe that strong AUM growth-led operating leverage is expected to power return on equity expansion as well, and what they're estimating is a 54% CAGR in the EPS from FY24 to FY26. So given all of those positives playing out for UGro Capital, we do have MK initiating coverage on this counter with a buy rating, and that is the reason why the stock is still holding in the green in an otherwise weak market. The stock as of now is up nearly 1%.
Let's move on and then talk about PI Industries on the technicals and charts. Sumit, what is the word coming in for PI Industries now?
Again, the stock is showing the weakness. Previously, 3500 was acting as a support, but in the last week it has just taken the support, and again it is giving the fresh low today. So today the low is 3330. So we are expecting a more downside here. All the moving averages are broken, even the 200. So 200 was the previously support, and today it has just broken. So we are expecting the levels of 3170 ahead, approximately 5 to 6% downside from here.
All right, Ansh, Mahindra Logistics, why is this particular counter in focus in today's trading session?
So company has released its quarterly earning and they have recorded a year-on-year increase in revenue reaching 1,365 crore, showing a growth of around 3%. However, EBITDA is down by 20.7% on year-on-year basis, which explains the bottom line actually. Company has reported a net loss of 15.5 crore against previous year's profit of 12.2 crore. That also explains the reason why the stock is trading in red today. But despite of the negative news, stock is trading around its horizontal support zone, which has also given 4 bounces in prices in last 6 months. Also, the stock is trading 4% up from its day's low.
Okay, keeping an eye out on Mahindra Logistics over there. But let's move on and talk about Jubilant FoodWorks. That one is in focus. That will be reporting its numbers. Today, ahead of its numbers, we're seeing a bit of a jump up coming in the stock. But in terms of overall, what we're expecting for the numbers coming in from the company, like-for-like growth, that is a term that they give instead of SSSG growth, that we're expecting it to see a bit of a decline this time around as well. 1% decline, given that there's a weak environment which has continued in the QSR space. The discretionary spends is something that is expected to be a bit of a lag. Now, in terms of margins, EBITDA margins, gross margins, both of them are expected to be under pressure. Gross margins mainly obviously due to the raw material inflation, that's a bit of a concern still, while EBITDA margins, negative operating leverage, freight costs is high, wage inflation is something that is weighing on the operating margins of the company. Revenues, we're expecting just a 4% growth, margins a contraction of around 400 basis point is what we're expecting for Jubilant Food. We'll watch out for commentary in terms of demand trends, what is the like-for-like growth coming in and what is the sustainability over there, as well as in terms of the company's store addition plans, as well competitive intensity, the trends over there, what are they seeing, are key factors to watch out for from Jubilant FoodWorks.
All right, those are the factors to watch out for when they report their numbers. But Sumit, on the chart, what should one watch out for when it comes to Jubilant Food?
We would just advise to hold the stock if anybody is holding, and the level of 540 to 545, these are the levels which we are looking for the fresh breakout also. If you draw a trend line from the previous high of 560, so it will give a fresh breakout above the 540 levels. Today morning also it touched the 538. So just wait and watch and wait for the levels of 540. We are expecting the 580 and 600 levels to come ahead.
Okay, keep an eye out on those levels for Jubilant Food. As of now, just hold on to Jubilant Food if you have it. That's the word coming in from Sumit. But let's move on, talk about Kei Clothing. Ansh, this one is also in focus on the back of its numbers, I believe.
Yes, you're right. And actually, the stock is trading 8% higher today on this bear day. Company has reported an increase in revenue with total revenue reaching 262 crore, reflecting growth of around 16%. Profit after tax also shows positive results, which is up by 27% on year-on-year basis. Company's EBITDA stands at 61 crore compared to its previous year's 49.7 crore. EBITDA margin has also improved to 23.2%, up from previous year's 22%. Also, if you see the charts, stock is trading around its record high level and have been advancing for 8 consecutive months now.
All right, and that is on the earnings front. But Sumit, on the charts, how is it looking to you?
If you see the chart, on 12th of July, the stock was gap up and it was the highest day losing. Okay, so that was around 4 to 5%. But afterward, the stock was in the consolidation in the same range. So between the 650 and 700. So in the last week, the stock has gained and given the fresh breakout. So we would just advise the same high level as the 7112 as the trailing stop loss, and also we are expecting the higher momentum till the levels of 960. So hold the stock and ride the momentum.
Okay, that's the word coming in on Cable Kiran. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.